So I can jump in and start on the Fed, and would love to hear your thoughts also. But I think they've backed themselves into a tough place. The Fed has been pretty transparent, pretty clear, and pretty on message that they're going to be very, very patient, that they don't see rate increases in 2021, that they're going to continue to lean into their bond buying programs, $120 billion a month. And most of these were policies that were put in place, last March, last April, at the very beginning of the pandemic. Well, you flash forward a year, certainly inflation is higher than it was at that point in time. The financial markets have done very, very well. The economy, the data is appearing to do better, and is doing better, significantly better than where we were. And so the question becomes, if those were all crisis policies, are we still in crisis, and do we still need them? I think, the Fed over the years, I think, directionally has generally been correct. I think degree and timing we can have arguments about. And I think in this particular instance, the Fed is probably a little bit behind the curve. And if you were to ask me, based on everything that we're seeing today, pent-up demand, where we are, kind of in the economic cycle, the economy reopening, more people getting vaccinations, I would suggest that the Fed is probably going to be moving a little bit earlier than a lot of people think. And I actually think that a move from the Fed would actually be positive for the markets. I think it would inject a sense of confidence that we're out of this crisis and no longer need kind of crisis era monetary policy. I'd hate to see the Fed go too quick or too far. I don't think anybody wants to see that and choke this thing off. But I do think it would, probably a little bit of short-term volatility around when it happened. But I actually think the Fed's probably going to be in a position where they're going to start talking about tapering and potentially raising rates sooner than their rhetoric has suggested.
Seems like Janet Yellen is in agreement with that. If you look at some of her comments, and she has an interesting perspective, having got the opportunity to sit on both sides of that conversation. And I think I would agree almost verbatim with everything you said, beginning with the fact that they've painted themselves a little bit in a corner so many times, just committing to this 2023 rate hike, which we all know that they can ease back on that with enough telegraphing. But the idea of the tapering gives a little bit of a compromise. It doesn't force them to jump from a dovish position to a hawkish position. It doesn't scare the heck out of the market. And the truth is, we don't need all of these buybacks. I mean, that tapering is probably the right thing to do. So I feel very strongly about everything you've suggested there. And then it kind of leads us into the next question, that if we're in a position where the Fed is a little bit less dovish, where there's a little bit less of this we're not doing anything until 2023 attitude, what does that do to the stock market? And in particular, what does it do to large cap stocks?